Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at United States Antimony.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And a quick note before we get into today's stock. If you need emergency cash and want to look at a short-term installment loan option, you can check out MaxLend Loans through my link below. Eligible customers may qualify for loan options up to $3,750, and funding may be available quickly if approved. But please be careful. Always read the full loan agreement, APR fees, repayment schedule, and total cost before signing anything.
So imagine it is early 2027, right? The U.S. military is trying to manufacture next-generation defense system.
Right, like armor-piercing ammunition or, aerospace components.
Exactly. But suddenly, the assembly lines just grind to an absolute halt. They literally cannot get the essential parts.
And it's all because of one obscure mineral.
Yeah, antimony. It's just been completely cut off from the global market. And today, for you listening, we are unpacking the one single company trying to prevent that national security nightmare from becoming a reality.
Because, the typical rules of mining economics are just being completely thrown out the window here.
They really are. They're being completely rewritten by national defense priorities.
Yeah, that is exactly the stakes we are dealing with. Critical minerals aren't just basic commodities anymore.
No, they're not trading on some open exchange like corn or wheat.
Right. They have become the ultimate geopolitical leverage. And the core thesis of our deep dive today really revolves around United States Antimony.
Because right now, they are effectively the only fully integrated domestic lifeline for U.S. antimony supply.
Exactly. And this is happening right when China has officially weaponized export bans to squeeze the West.
So we are talking about a company that isn't just, participating in a market. They are rapidly becoming the actual market infrastructure.
For a material the U.S. defense sector simply cannot live without.
All right, let's move into the wealth building context, because if you're managing a long-term portfolio, you have to be able to separate sensational headlines from structural shifts.
Oh, absolutely. And the foundational shift here is, it's what we call the reshoring supercycle.
Right, because for decades, the U.S. outsourced all the dirty, expensive mining to China.
Yeah, it was just cheaper. But now geopolitics is completely trumping basic economics.
So this reshoring supercycle, it's not a short-term fad.
No, not at all. We are looking at a massive multi-year reallocation of government-backed capital. They are forcing these supply chains back to North America.
And United States Antimony's moat here is just absolute structural scarcity. It's like owning the only water well in a town when the main reservoir suddenly gets cut off by a rival.
That is a perfect analogy. You own the well, you own the town.
You don't just charge for the labor of pulling up the water, you charge for survival.
Right. And with China banning exports to the U.S. in late 2024, United States Antimony's midstream processing infrastructure is effectively irreplaceable. You can't just spin up a smelter overnight.
No, it takes years of permitting and capital. But my cautious side has to step in here. A great macro story is one thing, but does management actually capture that value?
And that is the million-dollar question for your portfolio.
Right. So now let's look at the fundamentals. Because if they have monopoly pricing power, it should be glaringly obvious on the income statement.
Oh, and it absolutely is. The revenue trajectory is in a sheer hyper-growth phase right now. For 2025, revenues surged 163% to $39.26 million.
Wow. That's a massive acceleration from, around $14 million in 2024?
Exactly, $14.94 million in 2024. And under the hood, it's almost entirely the antimony segment driving this. That division surged 219% to $35.4 million.
Well, the zeolite segment just did a modest 14%.
Yeah, just steady growth there. But the why behind that 219% jump is crucial.
Right, because is it volume or is it pricing power?
It is overwhelmingly pricing power. That surge was fueled by a staggering 230% increase in the average selling price per pound.
Oh, wow. So defense contractors just have absolutely no choice but to pay premium rates.
None at all. They cannot negotiate. So gross margins expanded to 25%, and management is guiding for $125 million in gross revenue for 2026.
Okay, $125 million is huge, but let me play the skeptical auditor for you listening. I'm looking at the bottom line for 2025, and there is a GAAP net loss of $4.34 million.
Right. I know that sounds bad on paper.
Yeah, it doesn't exactly scream financial fortress. It sounds like they're burning cash just to keep the lights on.
I get the skepticism, but you have to peel back the accounting layers. That net loss actually obscures their true operational leverage.
Because of non-cash charges?
Exactly. Buried in there is $6.7 million in non-cash charges.
Yeah.
And over $7 million of that total is related to share-based compensation.
Okay, so they are paying executives in equity, not draining the actual bank account.
Right. From an operating cash flow perspective, the core business is doing great. They are hoarding cash for expansion.
Which really changes the context. And that cash hoard is massive now, isn't it?
It is a total fortress. At the end of 2024, they had $18.2 million. By the end of 2025, that cash position exploded to $91.3 million.
And long-term debt is practically non-existent, like under $60,000, right?
Yeah, just under $60K. It's a phenomenal de-risking event. They aren't at the mercy of high interest rates to fund growth.
That is incredible, going from $18 million to over $90 million in cash.
And they are putting it to work immediately. They invested $27.8 million in capital expenditures.
Most of that went to the Thompson Falls smelter expansion, right?
Yeah, $17.1 million directly into the smelter, because smelting is the bottleneck of the whole industry.
Right, turning dirty ore into high-grade military metal.
Exactly. Plus, they made a massive $37.2 million strategic investment in Larvado Resources to secure future feedstock.
Okay, so they are essentially buying up their own supply chain. That brings us to the catalyst timeline. What are the immediate triggers moving forward?
The biggest catalysts are entirely driven by the federal government stepping in. We are talking about a $248 million Defense Logistics Agency sole source contract.
Wait, sole source. So the government looked at the market and literally deemed them the only viable domestic provider.
You nailed it. No bidding war. They are a legally sanctioned monopoly for that specific contract.
And there was a Department of War grant, too, wasn't there?
Yeah, a $27 million grant specifically under the Defense Production Act to expand Montana and Alaska operations.
For you listening, a Defense Production Act grant is a massive stamp of validation. It elevates them to a critical national security asset.
Absolutely. And this is all being forced by a looming macro deadline, the January 2027 federal ban on Chinese tungsten.
Right. In U.S. defense applications, it's a hard legislative deadline.
Yes, the defense sector legally has to secure a domestic supply chain for tungsten by then.
But let's talk about the reality of executing that. Are they actually going to become a functional tungsten producer?
Based on their capital deployment, they anticipate becoming the first new North American tungsten producer in 12 years.
And tungsten prices are up, what, 900% globally?
Exactly. It creates what we call zero-cost optionality.
Meaning they are already building the antimony infrastructure, so if they hit tungsten, it's essentially a free lottery ticket.
Yes, a highly lucrative windfall.
Yeah.
In the near term, everyone is watching the Q1 2026 earnings on May 14.
To see if the run rate actually validates that massive $125 million guidance.
Right, and to see the imminent completion of the Thompson Falls expansion, which should crank output up to 400 to 500 tons per month.
With that kind of operational ramp-up expected, now let's pivot to the chart. Is the broader market actually buying this narrative?
They absolutely are. The market is actively repricing their strategic value in real time. Right after that Department of War grant was announced, shares spiked 3.82% to $10.05.
And that broke them out of prior stagnant ranges, didn't it?
Yes, completely. And the daily trading volume is heavily skewed to the buy side.
But, I always get extremely cautious with high momentum breakouts. If the structural support isn't there, it's just a house of cards.
It is a totally fair concern, but the technicals here are being supported by massive macro-thematic flows.
So broader global trends are forcing capital into this sector. Like, what?
What, easing global energy prices, which lowers their processing costs, a weakening U.S. dollar, which boosts commodity prices generally.
And the U.S.-Iran ceasefire dynamics altering global risk appetites, right?
Precisely. Institutional targets suggest we aren't just seeing a speculative spike, we are seeing higher, permanent structural valuation floors forming.
So what does market sentiment look like behind the scenes? Are the professional analysts putting their money where their mouth is?
The sentiment across the board is strongly bullish. Seeking Alpha just issued a specific buy rating.
That carries a lot of weight. And analysts bumped the price target recently, didn't they?
Yeah, they increased the price target by 16% up to $12.92. But institutional capital flow is the real indicator.
Right, because big players aren't just logging into an app to day trade this.
No, not at all. The company secured $67.6 million from direct offerings to smart money investors in 2025.
Wow. When institutions lock up capital at that scale, it usually signifies deep fundamental conviction in the multi-year thesis.
Exactly. And CEO Gary C. Evans is highly visible right now, ringing the NYSE opening bell, doing rounds on Bloomberg and Fox Business.
Okay, the CEO is pitching a great story, but I have to bring up a potentially bearish administrative detail from the filings.
Uh-oh, what did you flag?
On May 4, the CFO, Richard Isaac, commenced a personal leave of absence.
Right, the sudden executive transition.
Yeah, and sudden CFO departures usually spook the market, especially right when they are trying to manage $90 million in fresh cash.
It is a completely valid point to raise. But there is a very strong mitigant in place. The interim CFO is Sean Winkler.
Does he actually have the right experience for a scale-up like this?
He has 15 years of hardcore investment banking experience. And crucially, he has been consulting for them for 6 months already.
Okay, so it isn't a stranger coming in blind. The continuity of financial leadership is safely preserved.
Exactly.
Now let's talk about the risks. Because there is a glaring operational threat here. Gross margins are great, but the actual cost of revenue surged 156% to $29.38 million.
Yeah, that is the primary friction point of the whole operation. That surge is directly due to their current reliance on international third-party ore suppliers.
So they have these state-of-the-art smelters, but they are buying raw materials at a massive premium.
Right. They're acting as a middleman toll processor right now.
And for you listening, that is a massive execution risk. It does not matter if you have a $250,000 contract if you can't profitably pull the ore out of the ground yourself.
That is the exact bear case. If their domestic mines in Montana or Alaska face regulatory or operational delays, those margins will compress significantly.
And that $90 million cash pile will just dwindle away.
Yes, but management is actively mitigating this risk. Thanks to mild weather, they achieved an early restart of the Stibnite Hill mining operations on April 2026.
Oh, that is a huge catalyst for the model.
It is incredibly pivotal. They can finally pump higher margin, in-house raw feedstock directly through their Rettersburg processing facility.
Because every single ton of in-house ore directly displaces that expensive third-party reliance.
Precisely how they plan to protect and systematically expand those margins over the long term.
You know, it really makes you think about the broader market. If this is the premium you have to pay for having the supply chain locked down, what happens to all those massive defense companies who completely neglected to secure their own basic mineral needs until the absolute last minute?
That is a terrifying thought for their shareholders, honestly. They're going to be paying whatever United States Antimony demands.
So with everything on the table, what's the final verdict? How should an investor view this?
Synthesizing it all, the bullish score lands at a solid 9 out of 10.
Wow, 9 out of 10.
Yes. The verdict is that United States Antimony is a rare, highly asymmetric long position, specifically capitalizing on the U.S. reshoring supercycle.
They've got the $91.3 million cash fortress, the monopoly-like infrastructure, and massive locked-in government contracts.
Exactly. And the target horizon here is a multi-year hold. The global antimony deficit requires a long-term view to fully capture the compounding revenue and margin expansion.
Need emergency cash. MaxLend Loans offers short-term installment loan options up to $3,750 for eligible customers. Apply through the link below and carefully review the APR fees, repayment terms, and total costs before accepting any offer.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.